Should we buy or sell the US dollar slash the Swiss franc? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here we have the pair US dollar slash the Swiss franc, 5% here from the 52-week low, and we are at the highs. So the Swiss franc, it's a very interesting currency because it's long, Switzerland more broadly, it's been viewed as this safe harbor for money, So in times of war, it's a place where, very wealthy people can safely store their assets. So in this current context, the Swiss franc, it is definitively rather interesting. So here we have, the long-term chart for the US dollar Swiss franc pair. We do see here that during the peak of the dot-com bubble, you got this double top here. So let me just draw that in. So here we got, a double top, and then we did see a substantial weakening of the US dollar. So we do certainly see that money did flee into the Swiss franc during that period. That was not a war, but it was a situation where people were seeking a safe place. So here you can see that during the early part here of the global financial crisis, we did see some strengthening here in the US dollar vis-a-vis the Swiss franc. But when it became a bit more official, then we do see that the US dollar actually weakened against the Swiss franc here, heading towards mid-2011. During this period is also where you had a lot of concerns in the Eurozone. There was all kinds of talks of defaults. So basically, in this chart, we have seen multiple times in the past when there's been concern, and that led eventually to a significant weakening of the US dollar vis-a-vis the Swiss franc. When we zoom in a bit here, we do see that there's recently been a strengthening of the US dollar here. What is interesting in terms of the Swiss franc is that the US dollar is heading into a territory where it is likely to meet some horizontal resistance. So you see that this peak here, it did not work out. You see also here as well, it certainly seems like the bulls got into some trouble. We have some potential resistance levels back here, and these two lows as well, here. So we are heading into a territory that could offer horizontal resistance, and that's purely technical. Beyond that, we also have a declining red 200-week moving average, which is likely going to offer resistance like it did back here as well. So there are some technicals that could limit this bull rally. When we go here to the daily data points, we can actually draw in some time cycles. The time cycles have been relatively good, but not by any stretch of the imagination like super clean. Recently, you do see that there's an overall trend of these rise decline phases. There is the expectation based on the most recent time cycles that we are supposed, quote unquote, to enter a bit of a declining phase here, heading towards mid-April. We do see that the current rally here, it's been rather strong. So we then have to look a bit back and look at previous rallies, like here. You had a very strong rally, strong rally, strong rally, strong rally. But the tendency after strong rallies is to actually have pullbacks. That's been the trend. So let's explore a bit further and look at these overbought, oversold indicators, like here. So you can see here on the weekly RSI, we are heading into a territory that many times have triggered pullbacks. There have been some times where we went a bit higher, like here as an example, but that one resolved very substantially lower. A distance from the purple 20-week, green 50-week moving average, and also the blue 100-week moving average, it is at levels that have marked highs multiple times in the past. As an example, here you had high readings across the board on those indicators, and then you did see a very substantial weakening of the US dollar. Looking here on the daily data points, looking here at the RSI, we have to ask the question, what usually happens when we have these readings? So we go back here. Was this a good time to turn bullish on the US dollar? No, we got a pullback. What about here? Same RSI reading. What happened? Pullback. Okay, what if we go back here? Got a pullback. So that's been the trend. Also the distance from the 20, 50, 100 and 200-day moving averages, it is at levels that most of the time have triggered pullbacks. That's the data we have right in front of us. So let's then sort of figure out the line in the sand. I think that the key reading we have seen here is that we quite clearly have overbought RSI and PTO. That's pretty clear. We looked at what usually happens when we have these readings. We usually see a pullback. We also have a bit of a longer term radar in terms of time cycles, and the bearish phase is now expected based on the most recent time cycles. So in terms of giving the technicals here a reading, I do think that this it was a bit clearly bearish. So I think I will give it a -6 here for the bears. It was pretty strong. There were a few times where we got even more overbought, but that was more rare. The next we look at is seasonality. So to the right here we have the pure average over the last 5, 7, and 10 years. So here is the seasonality. We usually actually see weakness from February heading quite far away, actually all the way here towards early June. So over the last 5 years, 7 years, and also 10 years, we usually see weakening of the US dollar versus the Swiss franc. When we go here to the left, over the last, start with the 5 years, in that case, there is a tendency for April to be strong. So that is something to just be aware of. But May is very weak. June, July, and August are also weak. Over the last 10 years, then we do see a bit more of a clearly bearish trend for the coming period. Quite obviously bearish towards June. That is corroborating a more bearish thesis. And then over the last 20 years, March is one of the weakest months. April and May usually are more bearish than bullish. And then June is it is one of the weakest months for the US dollar vis-a-vis the Swiss franc. The seasonality here is quite clearly bearish. The only bit of a caveat is that recently there's been some tendency for April to bring some strength. So I think I will give this one a minus. I think I will give it a -5. But yeah, overall the seasonality usually favors the Swiss franc. When we talk about fundamentals, the more macro picture in terms of the US dollar Swiss franc pair. So the thing is that the Swiss franc for a long time has been this safe refuge. It also has been this place that Switzerland, it's been relatively neutral. There's been some signals as of late that they're going to be less neutral than they usually are. The thing is that there's the things we know about Switzerland and the things that we don't know. Throughout most of human history, it's been very clear that Switzerland, it is a safe refuge for oligarchs all over the world. I think the probability is very high that, notwithstanding the current signals and rhetoric, Switzerland will continue to be Switzerland. As such, it could very much be a benefactor of the sanctions that we are now seeing all over the place. So in terms of the fundamentals, because the macro picture could be more favorable to Switzerland than USA, I will give this one a -3 here, which would then be in favor of Switzerland in this pair. So yeah, because if we do look back at like World War I and World War II, we did see that Switzerland sent all kinds of signals that, well, we're not, going to be completely neutral, but after the fact, we do see that Switzerland did Switzerland, it did its thing. So yeah, If you believe in like conspiracy theories, if there's one country which one could actually make a genuine case that it could be, the center of an Illuminati, it would be Switzerland. I mean, the history is very clear. There literally is no country more shrouded in secrecy than that country. Okay, so anyway, here is the correlations between the US dollar Swiss franc pair and the S&P 500 minus 71%. Then we have 82% with the dollar index, 71% with the US dollar slash the Chinese yuan renminbi, and then you do have minus 88% here with gold. Short term, we have minus 35% with SPY, 41% dollar index, and then we just have minus 5 with the renminbi, then 8% with gold. So what happens to the dollar index will have the biggest effect on the Swiss franc. So we have seen a huge rally here in the dollar index. We do see that it is definitively in a zone, a battle zone. It has cleared a lot of resistance already. So the bulls have been doing a lot of work, for sure, no doubt about that. When we look here at the RSI and the PPOs, which measures the distance between price and various moving averages, we do see that we are at a very elevated level. The previous time we had high RSI and also high PPOs across the board. That was back here, and that led to a significant pullback here in the dollar index. So yes, it is possible for the dollar index to go higher. It is simply the fact, and the numbers are right here in front of us, that we are in a zone that often triggers pullbacks. Looking here at the dollar index on the daily data points, we see here on the MACD, it is, the last time we had this very high reading, that was back here, and then we did have a bit of a pullback. Reversion here to the blue 100-day moving average. That's very possible, and it's completely okay within an uptrend as well. So you could have a pullback in the dollar index without it being Armageddon for the dollar. So yeah. So basically the message here for the dollar index is that sure, it could go higher. It's just that it's a pretty decent probability that we will have some basic pullback based on the technical readings. Here we are looking at the US dollar Swiss franc against the dollar index. We have seen a primary downtrend that's been going on ever since 2007. Lower highs and lower lows. So a pretty clear trend here, and you do see that this recent low is significantly below this one as well. So the trend is very much in place. Looking at the seasonality, over the last 10 years, we usually see the US dollar Swiss franc pair weaken against the broader dollar index heading towards late May. Over the last 7 years here in blue, it usually strengthens a bit here towards early May. Over the last 5 years here in green, we usually also see a bit of a strengthening. So a bit of a mixed message here in terms of the seasonality. Then we will look at the dollar index futures and look at it against, we will take gold like this, GC, gold futures like that. So here is a bit of a lesson about trends, how you can have, a bunch of stuff happening over a longer period. So here we had consolidation. Then we had a massive rally. Then we had a massive sell-off. And now it seems like we are back in consolidation mode. So basically, more or less moving sideways in this pair. Let's quickly measure how long the previous consolidation was. So this consolidation, we did have a breakout after 3,700 days. So let's measure this consolidation. Yeah, approximately from here. Yeah, so this has been going on for 4,600-ish days. So a protracted sideways action here, you could make a case that we have a super big picture double bottom, approximately around here. Let's now look a bit at the seasonality here. Yeah, let's take daily data points. Yeah, so in terms of the seasonality, over the last 7 years, we usually see the dollar weaken against the gold towards later June. Also in green here over the last 5 years. Over the last 10 years, it's more or less up and down. So in terms of giving this one a score on relative performance, so it was very, strongly correlated, unsurprisingly, with the dollar index. The dollar index is definitely in a strong uptrend. The thing is that there's been so much talk now, chatter about the Chinese yuan rising up. There's far more transactions in yuan now, in terms of very important commodities. So the petrodollar is more challenged than it has ever been. We have not seen that really reflected yet in the dollar index. So that is just. But the thing is that this is behind the scenes here. There's just a lot of activity that could be mean that the dollar will weaken. The thing is that a very important part of a currency is that it is a social contract. That's the essence of modern money. It's a social contract, and given the weaponization of the US dollar now, the social contract has sort of been breached. So there's very good reason to think that the world has changed as far as transactions go. For a long time, it was just an assumption that we could do business with the US dollar. It was a reserve currency, but it is so hyper politicized at the moment that yeah, I think that there's reason here to give this one a little bit here to the bears. So we do end up with a score of minus 3.8. So the data here is more favorable of bearish theses than bullish theses. A key part of the bearish thesis is definitively the overbought RSI and PPOs. Those were like the lines in the sand, the signal. But we did see that other technicals, seasonality data, fundamentals, and relative performance, it did overall corroborate that thesis. Further, we did find time cycles that recently have been rather good at calling price action, projecting price action, and that showed us that there is the expectation of a bearish phase in the current time cycle. So yeah. Of course, we always use stops and do our best to be market neutral.